Hey everybody, Michelle Massio here. Thanks for checking in. Thanks for checking out my video. I'm gonna go over a quick video, 10 minutes, maybe even less. I'm gonna put my timer on and I am going to show you how super easy it is to sell a covered call, right? Now you might be thinking, what the heck is a covered call? And I'm gonna explain that to you. Anybody, first of all, I believe that everybody should be trading options. Why? Because it's an easy way to make predictable, steady stream of income, right? So what is a covered call? A covered call is a very, very conservative way of taking in income. It's when you own stock, or maybe you don't even own that stock yet, but you buy stock now, and then you sell a call against it. I'm going to give you an example. Um, I'm going to use an example of an exchange traded fund that is a basket of weed stocks. Everybody should be have a little bit of weed in their portfolio. I'm not a proponent of smoking weed. I don't judge. You could smoke weed if you want. Personally, I don't smoke weed, but I do like to invest in weed because it's a very good growth-oriented sector, right? So like weed, cannabis, marijuana is not federally legal, but it is becoming more state legalized across the country. And a lot of people are into weed. So it is a sector that is growing, and I like to make money basically. So it's a cool place to put some of your portfolio, right? So you can choose. You can let me share my screen here. I just did a whole video and I forgot to share my screen. So this is like take 3. Share screen. Okay. I am going to show you how easy it is. So you can, let's say you want to trade a weed stock. I mean, we live in the day and age of Google, right? So Google is your friend. You can Google virtually anything. I'm going to say top marijuana stocks, right? I'm just going to say that. And I'm going to see what comes up, right? So Investopedia, top marijuana stocks for February 2021. That's where we are. And it gives you some good ones to start with or to start looking at. Canopy Growth, CGC. Kronos, Cron, Tilray, Tllry. You can also, let's say you don't want to choose a marijuana stock, you could just choose a marijuana ETF, an exchange traded fund, MJ. So let's look up MJ ETF. So MJ ETF is like a basket of marijuana stocks. That way you don't have to choose. I mean, just Google. This is so easy, people. Anybody that says, oh my gosh, I don't trade options because it's too hard, man, you are like, you are gypping yourself, because everybody should trade options. It's a good way to add income to your portfolio, consistent, predictable, steady streams of income. If you're trading stocks, if you have a 401k at your job, if you have like an IRA or a Roth account or a stock account or something like that, you should also learn, like, do yourself a favor, learn how to trade options. And you can instead of making, let's say 5% of your money, you can make 50% of your money. I'm not here to guarantee. There's no guarantee in life. There's certainly no guarantee in the stock market. You can lose money. The past does not predict the future, blah, 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 all those disclosures. But I'm here to give you some information, tools and resources that, and really show you exactly how you can be successful selling options and really boost your portfolio and really create yourself income. I mean, why do we invest, people? Do we invest so we can have like this screen on our laptop, or we get this statement in the mail that says, oh my gosh, I started at 3,000, I'm at 4,000, yay? No, we invest because we want cash in our pocket. We want to go spend money. We want to go buy something, right? So when you sell options, I'm going to show you exactly how easy it is to do that. When you sell options, you are creating cash in your pocket, and you could do that on a day-to-day, week-by-week, month-by-month basis. Very safe, steady, predictable streams of income. So let me go back to MJ. MJ is a marijuana exchange traded fund. It's a whole bunch of different things, right? This is so easy, people. It's got 32 holdings, right? You don't have to know a lot about it. It pays a little bit of a yield. What's a yield? A dividend yield? A dividend yield is a way that they, the stocks inside of this exchange traded fund, they're sharing in profits with their shareholders via a dividend. So dividends will typically pay quarterly. It's just more cash that you get. You can get that in cash, or you could reinvest it and buy more shares. You could do either one. So it's kind of a cool thing. It's like a boost to your portfolio, right? What does it have in here? What are the top ETFs or stocks rather? So it's got, here's the tickers, GWPH, APHA, Tilray, Canopy Growth, Kronos, blah, 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 right? Let me show you a couple of things. So this is Interactive Brokers. This is just one of the custodian platforms that I use. This over here, this is how we always look to start when we start talking about something. We're looking at a 1-year chart. So each of these lines represents 1 day, right? Red and green bars. Red bar means it closed lower than the prior day. Green bar means it closed higher than the prior day. It's not even relevant. Just look at the lines that go. So it just kind of shows you, okay, where has it been the past year, right? So right now, it's last trading 24.85. Look at this big spike. It was here, then it went way up here, then it came way down here. So what does that mean? That means if you want to buy a share of this, it's $24.85. So a lot of times people ask me, Michelle, how much do I need in order to get started trading options? Really, I mean, obviously the more money you have, the better, because you have more money to use to your advantage. But you can also trade options with a very small amount of money. You can use margin, which is like leverage, or you don't even have to use margin. So let's say you wanted to trade MJ. Let's say you don't even have an account. Michelle, I don't even have stock. I don't have options, but I want to get started. Where can I start? Here's a good place to start. Let me walk through this with you. I'm going to show you how easy it is, and I'm going to show you in under 10 minutes, right? I think sometimes I say that and it's like 11 or 15 minutes. But anyway, it's $24.85. You're going to buy 100 shares. 100 shares. I want to pull up a handy calculator. 100 shares, right? Times $24.85. Another thing, people, is you don't have to be a math wizard to be able to trade options and be successful at it. You don't have to be a math wizard, okay? $24.85 times 100 is $2,485, under $2,500. You can open an account. You don't even have to use leverage if you don't want to. You don't have to use a lot of risk, have a lot of exposure. Less than $2,500. You buy 100 shares. Then what do? A covered call is where you're selling a call and you're saying, okay, people, pay me some money and I'm going to promise you something, right? That's what a call is. It's like you are paying me, and for that payment, I'm exchanging. I'm going to tell you that I'm going to do something. And in a covered call, I'm going to say, okay, if the price of the stock is at or above a certain price, I'm going to sell you my shares, right? So here's a good idea. Don't make this harder than what it needs to be. You're going to invest $2,485. Then you're going to sell a $25 call. That closed today at $35, right? So you see that because it's like right here in my bottom right-hand spot of my, I'm going to make it bigger for you guys. You get to choose at which price you will sell your shares if it reaches that price or higher. This is like you are in the driver's seat, right? You get to make all the choices. You get to pick when, you get to pick the price, etc. I always say, let's start off like quick and easy, right? So I'm going to start with an expiration date for this Friday. So lots of things expire every Friday, right? Today's Wednesday, the 24th of February. I'm going to choose an expiration of this Friday. It's only 2 days away. I'm also going to choose something that's like right at the money, right? So I'm paying $24.85. I'm going to sell a $25 call, right? So it's $25. It closed. Don't be confused about all this shit on the page, right? I'm just going to walk you through it. It closed today at $35. What does that mean, people? That means that $35 gets dropped into your account. You pay $24.85 for the shares, right? You own 100 shares of MJ, of this marijuana ETF. Then you sell this $25 call. Somebody drops in, like Santa Claus, drops in $35 into your trading account. That's cash. You get to use it right then and there. You don't have to wait for anything. It's cash that goes into your account, $35. Between now and this Friday, is only 2 days away. Now and this Friday, if MJ is 25 or higher, you're going to sell your shares at $25. Well, that's kind of cool because you paid $24.85 and you sell them at 25. How much money do you make? Let's check out the math. Super easy. Again, you don't have to be a math whiz. 25 minus 24.85 times 100 shares. That's 15 cents times 100 shares. You make $15, and then you also make the $35 that you got paid, right? So you make $50, right? So between now and this Friday. Now you're only putting up $2,400. I'm $24.85, right? So if I'm making $50 and I put up $24.85 for 2 days, I make 2% on 2 days. Oh my gosh. Now, how much is that per day? I don't know. Let's calculate it out. I'm going to divide it by 2, right? I'm going to divide it by 2. Now I'm going to say, okay, how many days are in a year? 365. So if I did this every day, how much money can I make? Right? I'm just going to use 365. I mean, you have the opportunity to make 367% on your money, people. Now, I don't know about you, but 367% is very attractive to me, right? Now, I'm not here to say you are going to listen to Michelle, trade tomorrow, buy some MJ, you're going to make 367% of your money. No. Anytime you invest in the stock market, there's risk, right? I mean, what if the company goes bankrupt? What if, I don't know, what if there's a nuclear war tomorrow and the whole stock market crashes? You're going to lose your $2,485, right? So there's always going to be risk. You have to decide on if you think that risk is big or small. Here's how I look at it. Like there's always risk, right? So there's risk that, I don't know, like a meteor can drop onto my laptop right now and I could just blow up or something. It could happen. It's probably not that likely, but it could happen. We could go to war tomorrow, nuclear war, and maybe the stock market crashes or something. It gets eliminated, and then there's a likelihood, but it's probably pretty small. So that's we're talking through some likelihoods. Okay, so that's how it works. So I'm going to buy 100 shares of MJ ETF, of this marijuana ETF. I'm going to pay $2,485. Maybe I use margin, maybe I don't. Watch another video for details on that. I'm going to sell this $25 call. I'm going to get $35 dropped into my account. If MJ is 25 or higher between now and Friday, I'm going to sell my shares at 25, and I'm going to make $50 total, right? $35 for the option that I sold plus $15 on the increase of the stock. What happens if MJ is not $25 or higher between now and Friday? Let's say Friday comes and MJ is $24.99, or let's say it's $20 or it's $15 or whatever it is. What does that mean? That means my option is going to expire worthless. That means I keep the $35 that I got paid, and I also keep my shares of MJ, right? And what does that mean, people? That means that Monday, I could just do the whole thing all over again. So this is like a very much a rinse and repeat strategy, right? So all you're doing is you're taking in income, and that's why we're doing this. If you already own stock, you should be selling options against your stock. Now, sometimes people will say, okay, Michelle, where's the risk? You have to know where the risk is. Where's the risk? How much money can I lose? Okay. So first of all, if you already own the stock, this is no more risk than you already have. You already own the freaking stock, right? So it's no more risk. But here's the risk if you own the stock and you sell an option against it. Let's say you own MJ and you sell this $25 call, and let's say Friday comes and something happens with cannabis and it explodes and the stock is like $50, right? It could happen. Guess what? You're going to sell your shares for 25. So the risk when you are, listen to this, people, press pause or maybe reverse after you hear me say this, listen to it again. The risk when you sell a covered call is that you might give up a little bit or a lot of bit of extra profit that you could have made if you didn't sell the call, right? So instead of making this much money, you make this much money. That is the risk in selling a covered call. Now I'm going to say that again because I want to make sure everybody's clear and understands this. The risk when you sell a covered call on, let's say, a stock that you already own, you don't have more risk in the stock market because you already own the stock. You're already subject to volatility in the stock, right? It might go up, might go down. Let's say you buy MJ at $24.85 and it goes down to $20. You're going to have a short-term unrealized loss, basically, right? It's unrealized because it doesn't get realized until you actually sell your position or liquidate your position. So it's unrealized, but you will already have that risk because you already own the stock. The only risk that you're adding when you sell a covered call is that you might give up some upside potential, right? If the stock goes higher, you're going to give up that upside. But the flip side is you're getting steady stream of predictable income. Now, I don't know about you. Maybe that's important to you that you give up a lot of upside potential. Most people that I've spoken with over the years and continue to speak with, most people are very, very cool with a systematic steady stream of income. When you're making like $35, every couple of days, I know it doesn't sound like a lot of money, but you're only putting up $2,500, right? This is a way of, look at this number, 3.67. This is a way when you're selling covered calls that you can make 367% annualized return on your money in a very safe, predictable fashion, right? Now, sometimes people might say, okay, Michelle, what happens if the stock goes to like 27 tomorrow and then it goes back down to 24 on Friday? What happens then, right? Here's the answer. So when you sell a covered call at whatever strike price, at whatever price, let's say $25 in this particular scenario, you have to be able to, deliver your stock at 25. But it's up to the other person who bought that option to actually exercise that option. Now, usually, mathematically, I would say probably 90% plus of the time, options will only get assigned on the expiration date, meaning Friday, right? So this Friday in this case, it could be early though. So it could be where, the price goes up to $27, let's say, I'm just using that as an example. And then your option gets assigned and you sell your shares at 25, right? But if that person that owns that option does not assign that contract and it goes back down to 24 on Friday and it closes underneath that $25 level, let's say it closes $24.99 or underneath, you keep your shares and then you get to sell another option on Monday. Again, this is a way to create yourself a steady stream of predictable, passive, extra income. I hope this video helps. Subscribe to my channel. I do lots of videos on this. This is super easy. I'm telling you, people that say like, oh my gosh, I don't want to trade options because it's too much math, or I'm not good in school, or I wasn't good in school, I don't understand. They're very easy concepts. Anybody can do this. Like a 10-year-old can do this. I'm telling you. Learn these concepts, subscribe to my channel, hit me up with questions if you have any. And in the meantime, I hope this helps, and happy trading.